All right. Sorry, it's annoying to have to get back into Zoom, but it's the only way for me to make the recordings easier between the pre-market and the mentor groups. Normally, I try to cut them off earlier, but we had a lot to talk about. So, um, markets are being funky, by the way. So the bears committed, retested, no bears showed up. Today might be a day for me to go golfing. I think I'm gonna, I think I'm gonna go golfing. Um, but let's see here. Today, I'm kind of like, so my plan was to talk about day trading options. That's on the list. Would you rather me, we're going to talk about it all. Would you rather me talk about swing trading options or day trading options? Which one are you more in the mood for? We'll hit on all of them. But is there a preference today, voting wise? Type it in. Let me know, day or swing, for us to focus on for the buying options section of this month. I know we still have like 20 more people to jump into the room. So okay, we got a vote for swing. We got 2 votes for swing. For those that just jumped in, do you want to learn? I'll let Justin jump in real quick too. Would you guys, we're taking a vote real quick. Do you want to learn swing trading or day trading today? We're going to learn them all, but today, which one would you rather we focus on? We got 2 votes for swing trades, 3 votes for swing trades, 4. Let's do swing trades. Good enough to know. Need to learn to swing like Steve's daughter. Yeah, I know. Okay, swing trade it is. Awesome. Get my screen share going. Now we are officially partying. Okay, let's dive right in because I always talk too much. So this is recording. Yep. Okay. Buying option swing trades. Again, this has already been taught in the courses. I'm just kind of reteaching it. So if there's something that you want to know more about or you feel lost, these are all in your March courses and I teach them all there. This is a chance for me to reteach it, explain it maybe in a little bit different way for you to ask questions. Feel free to ask as many questions as you'd like on swing trading options. And we'll go from there. Awesome. So we're going to be talking a little bit about determining how long it will take to get to your target. Basically, again, you could either do the double it. So if we think it's going to take 10 days to get there, buy it 20 days out, or you can use the 20 delta method. So that is true on swing trades. So you can do that. You never want to buy less than 2 weeks out. Even if you think the move is going to happen in a few days, never buy less than 2 weeks out. It requires you to be so perfect. Will it pay you the most? Yes. But you could be correct on the move and get completely destroyed, even though you were correct on it, because there's just not enough time on it. Whenever you go less than 2 weeks, you've got, again, we're trying to hold these for about, we're trying to hold these for about 30%. This is our thing just processed. So actually, let me go ahead and get that thing uploading. Sorry, get that rocking and rolling. That way. Give me 2 seconds. Remarket. Okay, there we go. If we're going to be planning on holding these things for 30% of that time, right? And you buy something, let's say I think it's going to go down tomorrow, and you buy something that expires tomorrow overnight. So think about this. You just paid for 24 hours worth of potential. You just lost 8 hours overnight. You can't even trade it. So you are already getting cut in half on theta. Now you're just praying that it moved a gap large enough to offset the 8 hours or whatever of the markets not even being closed. And it's actually more than that, but you get the point. You understand what I'm saying. You're paying for time. It's just like on Friday buying something that expires on Monday. You just paid for multiple days that you cannot trade. It's going to be a little bit more expensive, and come Monday, you better be right or wrong, right? It's extremely hard to make money that way. Even if I think the move is going to happen in one day, tomorrow, I'm going to buy it about 10 days out, which is, again, when I'm talking about 2 weeks out, I'm talking about Fridays. So I'm not talking about 14 days. I'm talking about each Friday's expiration. So current Fridays is 1. Next week's Friday is 2. So if it's already Thursday this week, you're only buying about what, like 8, 9 days, something like that. So it's not like it's 14 days, 2 Fridays out. I'm talking about it's always just the following Friday is the closest that I'll do. Does that make sense? So even if it's on a Monday, I'm not buying this current Fridays. There's a reason why we sell the current Friday's expiration for credit spreads, is because it has a high chance that we're going to win, which means there's a very low probability that you're going to make money on that. Again, could you make money on that? Yes. And when you get better and more advanced and you understand how to read charts even better and you're really dialed in, can you start going shorter than 2 weeks? Sure. If you understand the risks, you understand why you're doing what you're doing, you have the correct size, and you have really good read on sentiment. Yes. But starting out, that rule right here is going to save you a lot of money starting out. So it's a good place just to stay with. Okay. Just know theta is incredibly strong within 2 weeks. That's why I'm looking at our swing trade that's got 16 days left on it. And I'm like, my plan was for this thing to be at least hitting 1 hour target by this Thursday at the latest. So it's going to have to start doing something. And it's really not doing something. So let's see here. Again, we're planning on holding the position for about 30% of the total time to expiration. I'm not planning on holding it to expiration. Even on 0 DTEs, that doesn't mean that I'm like, well, I mean, not zero, absolute zeros. Just like the trade we're in right now, right? The most I can lose is 1R. So can I hold this until it expires? Yes. But even then, it's not usually ideal, right? If I can get out for a smaller loss or sell against it, that's what I'll do most of the time. There are circumstances where I'll hold on to it, but most of the time I am getting out of this thing when it's got 30% left. So come Thursday, if we're still around break even on that option, I'm cutting it. I'll have to just wait for another setup. All right. My goal on these options is around 100% or more. Once it gets above 100%, I'm not letting this option go against me. Now, does that mean that I'm not going to let it go back below 100%? No, it'll probably go back below 100%, but I'm not letting it turn into a loser. Once we go above 100%, I need to take something off, and I'm not going to let it get much lower than 100%, right? Like if it starts dive bombing down and now I'm only up 85%, I need to start taking some profits, half, all, etc. This is talking about swing trades here. Okay. 100% is that threshold. Once you're above that, don't give up too much. Now, if you still have tons of time on it, then sure, you can take some profits off and let it come against you a little bit on an S curve and see if it'll keep going. But most of the time, especially if it's about 30 days out or less at 100%, I'm taking it. If it's more than 30 days left on it, you have the chance to hold. Okay. Within about a month or so is really where theta starts kicking in hard. Within 2 weeks, it starts going crazy, and then it just keeps accelerating closer and closer. We're still buying about the 35 to 40 delta. Any questions on these basic rules when it comes to setting up swing trades? So we're not buying the expiration that we need to get to target, right? We're buying the expiration so that it gets to target within about 30% of that time. So we still have plenty of time left. If we're buying something that expires in 3 months, we want it to hit target in like 1 month, and then I'm getting out still with 2 months left on it at target, right? That's the idea you want to think about these options. Does that make sense? So we've got to shift the way we're thinking. We're not thinking, I have 2 months left on this option. It's like, no. If it's at target and you're up 100% or whatever, you're out. Depending on how much time you have. Now, if you have 20 months on these things and you've hit target and it's only been 2 months, could you hold on to that? Yeah, you're still well within the 30% mark of that, right? You could hold for another 4 months, 5 months. So do you have enough time to hold through an S curve? Yeah, you do. Most of the time, this is going to crush you. And I would still take profits off. I would still get out of something so I can have some size to add back in over there. All right. Cool. Let's move on to the next one. I am always using limit orders when buying and exiting swing trade options. 99% of the time, even when it comes time to get out for a loss, like I'm not letting this thing, I'm not going to market order out. The only time I might have an exception on that would be SPY. Other than that, if you're playing with options, limit orders have got to be where it's at. So even if you just want to go ahead and put an order in, instead of doing out the mid, do 10 cents less than the mid. You're going to get filled right away. The same thing as a market order, but you don't get crushed on it. Just remember, time is not on your side. So in order to make money by buying options, it demands that you're perfect. So give yourself more time than you need, right? It gives you a larger window to be wrong. Perfect example right now is this SPY trade we're in. I thought SPY would get there like today already. I thought we'd be at our target today already. If I would have bought it 1 week out, we would have lost on that trade. Because it's going to get there by next week, so I'll just buy it 1 week out. Nope. That would have required me to be perfect. Me giving myself a month out on those things allowed me to have room for the markets to be weird, right? And maybe still work. Again, just review. Don't hold it for the whole time. You're planning on holding it for 30% and get out, okay? Setups, you can use any setup that you would like. Just make sure you're applying these option rules to that strategy. So I stick to the setups that we talked about and taught in January, channels, S-curves. They haven't really steered me wrong. Stick with them. But you can do any strategy that you want. And going in the future, you'll develop some amazing strategy. These rules still need to be kept when it comes to options. Okay. All right. Again, we're going to use the same setups from month 1. Cool. And then we're using the green, yellow, red management system as well for these guys. I talked about what that is in the last section on the slides. Green works perfect. Yellow is kind of what we're in right now. It respected our entry, but it's not really going to target very quickly. Red is it didn't respect you get in, here's a channel, retested the channel, and it just like our credit spread yesterday. That's a red management system, just dead wrong. I'm not trying to make any money on that. I'm trying just to lose small. Those also tell me how patient I should be with it. Green setups just works, goes to target very, very fast. I tend to be a lot more patient with those. Let's try to make more money with those. Yellow, 2R is pretty much that's like my goal now. I'll take more off at 1R, maybe half, etc.
Simone, I have really important.
Cool. So have your hedge. We'll be talking about hedging options here soon, but have your hedge and management plan in place before entering the trade. You should know where the trade isn't working. Your price action, your skills are all good on that. If it's a channel, right, it should hit this and go down. If it doesn't, right? You should have a hedge plan in place, like what we're talking about right now on SPY. Should we sell against it? Should we not, etc. Should have your plan in place. And then take profits after 4, I say daily, but really any candles, sorry, I was freaking out. Take profits after 4 candles of the same color in your direction based on the time frame that you're using. So for swing trades, if you got in off of a 30-minute chart for a swing trade, and it's a shorter term swing trade, if you get 4 30-minute candles in a row of the same color, all 4 bull, take profits, some or all, but you've got to take something off. If you're buying puts and you're on, a daily chart and you get 4 days in a row of bear days, you've got to take something off profit wise. Okay. Here's another review of the green, yellow, red. I figured I'd throw this in here again. Do we all understand this? Do you want me to go back over this? Does it make sense? Type in a 1 if you're like, I'm good. Type in a 2 if you're like, yeah, let's review it. We went over this last week. Let me get some water so I can get some. So far, we're good. Good. All right. We'll move forward. Okay. We're going to be talking about selling poor man's covered calls. It could also be poor man's covered puts, right? Depending on which direction you're going. You can do this to bring in income, and you can do this to reduce risk. In this trade right now on SPY, we're looking at reducing risk, right? Depending if you're winning or losing on the trade. So let me show you a little bit more of how to do this. All right. So normally I'm using the hourly chart to figure out what's going on. So let's say I get in on a weekly, like on Lulu, we're using the daily chart to get in, right? A retest of the channel type thing. If on an hourly chart, I get 4 bull hourly candles in a row. So I need 4 daily candles in a row for me to really take profits, but 4 hourly bull candles in a row, probably going to get a retest here, right? It's setting up for a retest. So in that situation, my swing trade is winning. We're going to get a short-term pullback, most likely on an hourly. I could go ahead and sell a call in this situation 2 to 4 weeks out, and I'm going to try to sell it around the 20 delta. Ideally, I want this call to pay me about 10% of what my total option price is. So let's say you spend $1,000 on calls. I want these things to pay me at least $100 minimum. Not per contract, I'm talking total. It needs to take off about 10% at least of this. Most of the time you can do better than that. But if you're selling this thing 2 weeks out, so again, your original swing trade in this example would be something that expires in, like, let's say 3 months. You're selling this thing 2 weeks out. Okay, this is called a calendar spread. Why would you sell that 2 weeks out instead of selling at the same expiration as your spread? Because we're just trying to capture money on this little pullback from an hourly, right? If I sold this thing 3 months out and it pulls down this far, how much is that going to capture? 5%, nothing, right? It's going to pay you a lot, yeah, but whenever this thing gets ready to bounce, let me move this thing over. Whenever this thing gets ready to bounce, let's say we got in right here and it cranks up. When this gets ready to bounce, you're going to be stuck in it. So the idea is we want to sell it here and get out of it here before it bounces. So we're trying to make money on this little pullback on an hourly. So we're kind of just playing the hourly chart. Could you also do this on a channel? So let's say you get in on an S curve. Excellent. Swing trade right there. You're going bullish. Do you now have a channel formed? Yeah. So whenever it makes it to the top side of the channel, could you sell against it a couple weeks out? Yep. And then coming back down in through here, ideally, you're trying to get this to lose enough value where you can buy that thing back for 50 to 70% capture before it has a chance to bounce back up. Does that make sense of how we're setting these things up? The reason why we're doing this is because we're bringing in some extra income, and it's also reducing our risk at the same time. If you sold 4 of these things over the next 2 months, you're going to reduce the cost of this option by 40% or more, right? You just reduced risk on a winning trade, and you didn't have to do anything. It's pretty cool. So I use these quite a bit. Whenever I think a pullback's going to come, I use these. Any questions on this before I move on to some of the downsides of these? Does that make sense? Type in a 2 if that makes sense. Type in a 3 if you're lost. That way I don't get confused from the previous ones. We're good on that. I'll show you how to do that more. Okay, we're good on the concept. All right, good. Here is kind of ish. Okay. We'll do some more. Yeah, I'll give you some examples of what those look like here in just a second. The main thing that you need to look in and watch out for is do not let these expire in the money. So, do I have, I was gonna say if I had an open thing. Remember, these do not have the same expiration as your long options. So let's say, again, you bought calls here that expire in 3 months. So I should say they expire in 90 days. And it comes up really, really nice, and you think a pullback's going to come. So you sell options that expire in 14 days, and you sold that up here. If it keeps on cranking, this is not covered. You're going to get assigned short shares because this option contract is not over with yet. It's not over with for another 90 days. Technically, this is a naked option. It's not because you have something making you money on the way up. So it's P&L wise, you're okay. But to your broker, they're seeing this as a naked option. They're like, you're getting assigned short shares on that. Now, if that happens, all you have to do is call your broker and assign the shares from your long ones. You'll be just fine, right? It's not the end of the world. Again, it is covered, but we don't want to let these things go against us. So whenever we're doing this, let's say we get in here and it goes up really, really nicely. It goes up really, really nicely, and then it starts to pull back some. Well, we sell one and it starts to pull back. We need to mark out where are we going to roll this. So you'd have an alert level right here. You'd say, look, if we get a 30-minute candle close up above that, I've got to roll this thing out. You want to roll it when it's still really far away from your sold strike. If you wait for it to get all the way to your sold strike before you roll it, it's going to be down too much money. Remember, rolling is simply you're closing out of this one and taking the loss. So let's say you lose 300 and you're selling another one further away and further out in time. This one expired in 2 weeks. You're going to sell one that expires out 40 days. And it's going to pay you $1,000 or something. Let's say it pays you 600 bucks. All right, you lost 300 on that. You made 600 on that. You were able to sell it out further away and make money on it still. That's rolling. There are too many options with options.
But Tony, is this for the same price or that price of that moment when we are rolling? Or how does that work?
Yeah, so because we're going out further in time, this option further away is going to be more expensive. So
okay, so basically we are buying for that. I mean, what is the difference, I guess, if we would just take the loss and get into the option again? What's the difference between that and rolling?
So there is no difference. You're getting out of this, but you're not going to get into the same option that you just got out of. You're getting into a new option. Because remember, wherever you sell the option, you're capped, right? You can't make any more money past wherever you sell the option if you're talking about a debit spread. So if you have a long call down here and you sell right here, that's the most money you can make from here to here. That's your profit zone. Anything above that for calls, you can't make any money.
But Tony, you're trying to roll it to a higher strike, right?
Correct. Yeah. So if we buy this one here and it goes up and then we sell this one here and then it keeps going up, we want to close out of this while this is still down small. Let's say this is down 200 bucks. You want to exit out of that, lose $200. And at the exact same time, you're going to open a new one further out in time and further away. Most of the time, I would say 90% of the time, if I have to roll it, I'm going to roll it out to the same expiration as my long. So this original one is going to be a short-term one, hoping on a quick bounce down. I'm going to sell it 14 days out. This thing expires in 90 days. If it doesn't drop and it just keeps on going, this thing is going to be losing money because the price is moving closer to it. We're going to exit out of this for a small loss, and I'm going to reopen a new one at my actual target with the same expiration as my long. So now it's just a full out debit spread. So we're closing this one. The
So
only
once we
reason,
press, sorry, so once we press this option roll, there is a there on our trade. It says roll position.
yep.
Is it going to bring us to the option to the chart where we could pick the date?
Yep, you can. So
And-
I don't know if it'll actually take you to the chart, but it'll show you another option where you can select your expiration and strike. So
Okay.
that's
All
where
right, so we
you'd
can
want to
select.
just choose, yeah, wherever your target would actually be at. Okay, so let's look at an example here. All right, it comes down, it bounces up, you get into some puts. You buy the 185 strike puts that expire in 4 months. It's gone straight down ever since you bought those puts. You're super profitable, and there's still plenty of time on it. Is there a good chance that this is going to have a bounce here soon? Yeah, very high chance after being this oversold, we're going to get a bounce. So I'm going to go ahead and sell something as far out. And most of the time I try to sell it at a support, or you can sell it at a 20 delta is a pretty easy one. And I'm going to sell it short term. Why would I sell this short term? Why? Because I think the bounce is up to there. Right? If I sold this 4 months out, this is going to capture nothing. There's too much time on there. So I want to instead sell this like 3 weeks out. Because if this thing bounces, if you bought puts that expire in 3 weeks and you're immediately wrong and it bounces, what happens to those puts? They get crushed, right? They lose value pretty quickly. That's exactly what we want to sell. We make money when that option loses. So we're going to sell this 2 to 3 weeks out down here. And we're going to hope for a bounce. If we don't get a bounce, I'm going to put an alert right here. If this thing starts closing on like a 30-minute or an hourly candle below that, I'm going to close out of this one and I'm going to resell a new sold put with the same expiration and all the way down at my target. So let's say my original target for this trade was 130. I'm going to sell the 130 strike put that has the same expiration as my long. Now it's covered. Now it can come all the way down to my sold strike. It doesn't matter because it's the same expiration as my long. You only don't want it to come down to your sold strike when it doesn't have the same expiration as your long strike. I know this is a lot. We'll go over this. Don't worry. This is not the only time I'll teach this. If they have different expirations, you do not want to let it get close to this one. If they have the same expiration, you're good. Let it go. No big deal. Okay.
And if we are just about like we are losing in trade, if there is no, so what would you do then? Like it's going against us and it's running towards the expiration.
So
Would
like
you
on
just
like if it's not, this is an example if it's winning, right? This is what you do if you're
Yeah.
winning on your original position. If it's not winning, you will
Yeah.
sell the same expiration as your original position, and you're going to sell the strike that's at your target, your 2R target. So like on SPY right now,
yeah.
SPY is just running. Wow, that was kind of crazy. I don't know what's going on with that, but I'm glad I just kind of sat on my hands all day today because that would have been a losing trade. SPY is going absolutely berserk mode. So right now, these options don't pay enough. Again, this only works if your original position's barely down. Right now, we're down 50%, give or take. So it doesn't pay me enough to sell at my target. It takes off like $150 worth of risk. It's not worth it. It's not worth it. It needs to at least take off half. If I can reduce my risk by half, I'll sell against it. If not, let it go. I'm okay to lose 1R on this trade. I'm okay with that. I was okay with that when I got into this trade. I'm still okay with that. I had a chance to reduce my risk by half, and this market just said, come here, Tony, let me punch you in the face. And that's just what it did. I mean, this price action tells me high chance we're going down, and it just going crazy. So took my chance. That's okay. Right? It doesn't mean that tomorrow or the next day we can't be moving lower, but I know for a fact if SPY goes up to 570 tomorrow, I can still only lose 1R. So we're good. I can just let it do what SPY wants to do. It's going to be a losing trade. It is what it is. Okay. My only option now would be to buy calls, possibly exit it, or buy calls and help offset that. So that could be a solution if I want to. I only do that if I believe this thing has a very large move in it. I don't believe it does. Why do I not believe this has a very large move in it? Because where the weekly's at. I honestly believe we're going to have an inside candle on this weekly. And if this thing goes bullish, then sure, it could make a large move from there. But this candle, after this big of a move up, we're close, my friends. We're close. I don't want to be buying calls here. Why? Because I don't think there's that much of an upside. All right, this would have to move quite a bit to offset to make $1,000 without putting crazy size on it, which I don't want to do. So that option is off the table because, yeah, I just, at some point, you just need to accept an R, because what could happen is I could buy calls and then it doesn't go anywhere. And then I lose on my puts and I lose on my calls. And then now I lose 2 Rs because I was trying not to lose 1 R, right? You see what I'm saying? You don't want to be stupid and lose 2 Rs because you're scared to lose 1 R. Just let it lose 1 R, right? Accept the loss. I've been there. I've done that. It doesn't work. Learn from my mistakes. At the exact same time, though, whenever the markets are not straight vertical, again, this is not normal. Normally, we have S curves as it moves up. Normally, the markets will S curve and give us chances to read strength, to take trades, to get in long. Not in this market. You had one buying opportunity in the last 6 months, and that was right here, and that's it. This went straight up. That's gone straight up. Like, it's mind-blowing how crazy this market is, which, again, sets the door for just, guys, this could get wrecked. If the bulls do not hold 440, I mean, this could be COVID all over again. Like, just because, and I'm not saying it's the end of the world, but I am saying that we will take out COVID lows. Like, that's what I expected us to do over here. This is going to happen. It's happened to every single stock that's been pumped. Look at every single stock that acted like a meme stock over COVID. It's gone right back down to pre-COVID levels. We haven't done that on SPY yet. Will it do that? I doubt it. But if the bulls don't step in here, that's exactly what's going to happen, because the amount of people that are like, oh my gosh, I am missing out. Let's go ahead and load my 401k into this thing right now because all my retirement account, it's just leaving without me. These are the type of people that are buying this market right now. The FOMOers. Oh, I should have just bought. I should have. Everyone that exited their 401k retirements for a loss down here are all loading in right now. Mark my words. So if this doesn't hold, everyone's grandma, everyone's grandpa, every 20-year-old, every 50, every person in America is going to freak. And then you'll get that. That's why I hate these markets. If you go straight up, you better freaking be strong, because if not, they fall 5 times harder. So side note, but just know it's out there.
So
Go ahead.
Tony, then in that context, it's no brainer to keep the puts that we had. It's like,
That's why I'm trying to be patient with it, because I know eventually
Right.
I'll hit home runs on this thing. I might have to lose on a couple swing trades first, and that's okay. That's the same thing that happened to me over here. I lost on
yeah, you
swing
did it the
trades
same
here,
on the,
and
right, on the way up, right?
yes.
You did the
I
same.
don't just
Yeah.
I don't just buy puts because I think it's going to go down. Don't do that. But whenever the markets gave me a bare reason to get in, like on an hourly through here, I would buy puts. They'd win for a little bit, and then they'd just get ripped their face off. Fine, take my loss. And then finally, whenever it started to work, I started to grab it. If you notice, if you just wait for the weekly trend to go bearish, that's when it finally works. So it's kind of that same thing. Just wait for the weekly trend to go bearish.
Mm.
We need
So
to,
how many
again,
months?
I am not just going to buy puts and buy puts and buy puts and buy puts and buy, like, I'm not doing that game. Just so you guys know, like, this is my one shot to be aggressive. And then after that, I'm not going to be aggressive. I will go short when the daily breaks and goes bearish. That's my next time I'm going short. That's it. So don't get the impression of like your eyes light up and are like, oh, I could make so much money. It's like, it's not that easy. You will lose 10 grand before you have a chance to make 15,000. And then you're only up 5 grand, maybe. Like
So
that's what's gonna happen.
so are you now? I missed a couple of because of this late. So did you suggest to buy puts now?
No.
To sell? Sorry,
No.
to sell puts to hedge this thing?
No,
or
it's down too much. You could only do that when it was close to break even. So pretty much yesterday was the only time to do that.
And I did yesterday. That, by the way, I did it.
Oh, good. Then yeah, you're good. Then just hold them.
Yeah, just hold them.
Yep.
They're kind of evenish with the other guy. So just hold them and wait and see what happens, right?
No
Is it
matter
this
what.
side?
Yeah. Yeah. No matter what, you're going to lose small. So if it doesn't work, you lose small. If it does work, you'll make some money.
Yeah.
Yep.
I'll
And
play
then
a
whenever
lot.
this thing goes bearish on a daily, which is right here, whenever this thing goes bearish on a daily, then I'll be looking to add for swing trade puts. Until then, we have a bearish divergence that's been going on for 9 months. So again, just because you have this doesn't mean it has to go lower. Ask these people that tried to play the bearish divergence how well that's working. But it is telling you something. Just wait, right? Just wait. It's going to come. Life-changing money is going to come. I was really hoping it would be a little bit earlier. And I still think it can be. I think things could be very, very different in a week. But if not, I control my risk and I don't chase. I don't just buy puts because my gut's telling me I can make a lot of money to the bear side. You'll go broke before you get a chance to be rich. You'll run out of money before you'll hit the home run. You've got to trade the charts. The charts were telling me when we got into this, we finally broke key levels and trends on a 2-hour, which is what I was waiting on. And then it reversed. And I didn't chase puts here. I waited and I got into puts and there should have rolled over and it didn't. And it cranked and I was patient. And then it should have rolled over and it didn't. That's the game we're playing. And that's what's going to happen if you think this is going to be easy money, you are incredibly wrong. The largest opportunities to make money are the hardest. You have to control your emotions perfectly. You have to accept the loss. You have to be patient. You have to not chase. You have to not get FOMO to the upside or to the downside. You have to just wait. I tried to be aggressive here. That was my one shot. After that, I'm not being aggressive. That was it. It needed to work. And it still might, but it doesn't look like it wants to now. Now it looks like it wants to take out this high wave candle. And if we close on a weekly above that high wave candle, we've still probably got 2 more months of going bullish. And so we'll stay in this same mode that we're in right now, which is day trade bullish, make money day trading up, and stay patient. And eventually we will get paid. We'll make like 4 months worth of money in 1 month. In the meantime, I'm just trying to make 2% a week of my account on some short-term things. And I know for everyone that's got a job, it's really, really, really boring. But that's the safest way to go about this market right now. Could you do a lot more credit spreads over the, bullish and stuff? Yes. It's too aggressive for me. My job is to try to help you consistently make money. And if we don't make money consistently for a month or two, but then in May we make 10 grand, it's worth it. Because what I don't want to do is lose $5,000 for the next 2 or 3 months and then make 10 grand. And then we're up 2 grand, like, or even maybe back to break even, right? That's what I want to avoid. So if it means that we don't make any money for a month or two, that's the safe way to go about it in my experience. So that's what I'm trying to lead you with. Again, you can do whatever you want. Don't just trade because I'm trading. You now have enough information for you to trade your style. But for me, I have warning signals going off everywhere. And that might mean that it's going to be another 5 months of going straight up. That's okay. The warning signals have not left. It was the same thing that we had 7 months ago. Ask my people in my premier group last year how fun it was to sit through all of this move. I wanted to pull back to here, and it just barely missed us and then took off. And this one's even worse, right? Like this one's even worse than this one. At least had some S curves for us to play. Oh, come on.
So Tony, I have a very little time on this put, right? And we all have. So
Yes.
now if I'm kind of breaking even with this other put that I
You
sold,
shouldn't be at break even. There's no way you'd be at break even.
because I
you
bought
sold too many.
only one and I had two puts, so that's why I'm kind of
So you sold
breaking
two
even.
and you bought one?
No, I bought two and sold, and then I jump into even just with one.
Okay. So yeah,
But-
mathematically, it should not be, you should not be at break even if you have one sold put and two. Even if you matched it, it's not going to be break even.
Well, it's not approximately, but shall I
Close.
just get out of the put because we are close to that?
Again, it's up to you. If you get out of it, you can lose very, very small. Is your goal to not lose big, or is your goal to win? If your goal is to win, at some point you've got to be willing to accept the risk. And right now your risk is very, very small.
Okay.
So
No,
I
okay.
would personally
I
say,
remember you saying that even if it's swing trade, if it comes after 30% of time, that we should then start doing something.
correct.
So
That's what we
is
already
it
did. Yep. So it's either reduce
hedging and
size,
all?
which we did, and it's sell
Okay,
against
okay.
it, which I was going to do. But
I see.
yeah.
Okay.
So we've already
Okay.
done something against it. So now you're in a place where you can lose small. Now you can wait. For me, I'm just going to probably have to take a 1 hour loss on this and go do one credit spread to make it back, and life is good. I mean, I already made it back pretty much from yesterday's credit spread. I could look at it that way too, right? Losing is only a big deal if you think you can't make your money back. That's the only time it's a big deal. If you don't believe you can make money, losses are just going to destroy you. Because in your mind, winning is extremely hard to do and losing is extremely easy. You've got to flip that. Losing big is extremely hard to do, and winning is actually
it's
pretty
not
damn
in my mind. That's not. It's not in my mind.
No, I'm just
Sorry.
talking in
I mean,
general, right?
in general, yeah. I was just asking because just to learn the system, that's why I'm asking, not because I'm afraid to
Totally.
lose.
No. Again, I
Yeah.
wasn't saying that towards you, Natasha. I was just saying that in general, right? That's most people's struggle. So, our time is almost up here, but I want to finish this last little slide. Okay. So I kind of broke this down. If we were to go ahead and sell the 145, again, the 130 is kind of like our final target. We're going to sell the 145. Why? Because this thing has made a large move down. We think it's getting ready to bounce up. Maybe on like a 15 or a 30-minute time frame. This is on a daily. Maybe on a 15 or 30-minute time frame, it's gone bullish. There's something telling you that short term, big move down and short term stuff's going bullish, that there's a good chance we're at least going to come back up to some EMAs, maybe up a little bit higher. Okay. We want to try to offset our risk and make a little bit of money on that. So we do that by selling a shorter term 145. Okay. Strike. And this strike's going to expire in 1 month. Remember, our long put right here expires in 4 months. We're going to sell this 1 month out, and we're going to sell the 145. If it starts to roll down, I need to roll this thing out, right? We do not want to let this get into the money. We don't want to roll it when it gets close to our sold strike. This thing will be down $1,000. We don't want to roll it for 1,000 and then open a new one for $600. Like that's a losing proposition. You've got to roll it. You don't have to roll it like right away, but it needs to be a while away from. Ideally, you want to try to roll this thing when it's down a couple $100. Okay, $300 to $500 at the most. All right, so now let's do here. All right, so we got our nice little bounce up. We can buy this back, right? What's happening to our sold put here on this bounce? It's worthless, right? If someone bought puts here 30 days out and then you get a whole week of straight up, it's worthless. So we're going to buy this thing back. We made some money on this. What's going on with our puts here? They're back to probably losing. Our break even at this point is probably here now with theta. But what did we do after 1, 2, 3, 4 bear days in a row or bear candles in a row? You take off something, and that's exactly the reason why. Because with options, this can burn you. You still have plenty of time, right? This has only been a week, and these expire in 4 months. And then it starts to fall, and then it finally comes all the way down here. So we've exited this 145 before the markets had a chance to roll back over. That's just a steeper retest than what we really wanted. But so we made money on this bounce, reduced our risk, and then we exited the short put before this move started to come in. How do you do that? Go to a smaller time frame, a 15 or 30 minute. Whenever it gets into the EMAs or whenever it gets into the spot where you think it's going to go over, you're waiting for that 30 minute to break bearish, or you're waiting for that 30 minute to break the up channel, right? Using the smaller price action at the spots where you think it's going to get out. Do you have to be perfect? No. This I thought would go lower and then it popped up. That's okay, right? At the same point, you're still accepting the risk, and then it rolls on down. There's your target. So now, if we've been in this thing now for, let's see, this is a daily chart, probably about a month and a half now. We bought these 4 months out. This would probably be about time to take profits. Could you sell against it now? Sure. Let's say you had more time. Let's say you bought this 8 months out, so you have plenty of time. Could you do the same game again? What's about to happen again right now? We're in the range again of probably another S curve coming back up, and it's probably going to come back to the key level, right? So you could sell another 1 month out or 3 weeks out or 2 weeks out. It's up to you. Pam, yes, when the daily breaks, I'll be buying puts if it gives me an opportunity on a retest. Yep. Until then, we just need to wait because we'll burn through thousands and thousands of dollars trying to call the top on this market when we don't have to. The markets will tell us. I just personally don't think by the time the markets tell us, I think it's just gone. I don't think we're gonna get much of a retest because that rubber band is stretched so far that when it snaps, it's gone. That's why I was okay to be a little aggressive on this, but if I end up missing out on this, then oh well. But yeah. All right. Any questions on selling these poor man covered calls, covered puts? This is an example again of what to do when you're winning, right? You can sell these and you'd be putting alerts here. You'd be selling a lot lower. And if it starts to go lower than this on a 30-minute, you're rolling it and you're just going to roll it out to the same expiration as your long strike. Cool. We'll go over more and more examples of this, but sorry, go ahead. On that. Good. Okay. I've kind of retaught this. We'll go over a lot of examples. And by the way, next month, we're going to be going over some really cool mindset stuff next month, but I also purposely did that so we could have more time to digest all of this before I just turn the fire hose back on. I feel like I tried to give you as much information as I could, as fast as I could, but at the same time, we now have enough information to make money. You should have enough information to start making money. Now we need to make sure that you understand it before we really start diving into things. So next month will be a little bit lighter and easier. It's going to be on some emotional control things and stuff like that to really help you. And it's really beneficial and you're going to love it. It's going to help you see your emotions before you ever trade. So instead of losing 10 hours on day trades and being like, I should have never traded, I'm going to teach you how to recognize that before that 10 loss ever comes. And that's huge. So I'm going to show you how to do all of that starting next month. It's going to be fun. But it also is going to give us a chance just to kind of review all of this, do more examples, more back trades, and solidify credit spreads, solidify buying options. Because again, it's a lot to learn in 1 month. And I think the majority of you are kind of like, it wouldn't hurt to get more examples of this. So that's kind of where I'm at. So yes, it's going to be fun. Awesome. We'll leave it here. I'll keep in the loop on anything that we do on the markets. For right now, I'm probably going to just take the day off and sit back on this. I think this is going to be very, very tricky trading. I think as soon as the bulls commit, it's probably going to go bearish, just like it did this morning, right? The bulls committed, we went bearish. And as soon as the bears commit, we'll go bullish. So instead of chasing all that and working, trading should be easy. And if trading is hard, it's because we're trading in a market that's probably not giving us the clearest of signals, which is today. And it might just go straight bullish. It might be a very, very easy bull day today. That's okay. I'm going to wait. Based on just the morning. The morning trap the bulls and then trap the bears. I'll wait. I don't need to make money. You will make money in the markets as soon as you're okay not making money today. You will make money in markets and make money in trading as soon as you're okay not making money today. That is the key. Yep. So I'm going to go enjoy my day. That doesn't mean that I won't trade, but it would have to just be perfect. And I doubt we get that today. So if I get the world's greatest channel break, I'll consider it. And it would need to pay me perfect, and it would need to be like, it would have to be perfect. Other than that, I'm going to go enjoy my day. I'm going to go golf. I'm going to go do something. Go enjoy your day. Go do something. Take the stress off. We'll let the markets tell us. And if the markets tell us bullish, now we have a direction to go for tomorrow. Now, tomorrow, we have a clear sentiment read, and now we can start going, okay, we are bullish. Tomorrow, let's make some bull money, etc. Right? Trading should be easier. And if it's hard, it's because we're just out of line with the market. So expected it to go bear, it's going bull. So now we wait, figure it out. Love you guys. Have a great day. We'll be meeting again. And I'll go over all of this. I'm going to reteach this exact same stuff in the PM session today, in the evening session of the mentor group. So you'll get another chance to kind of go over all of that. Hopefully I'll explain it in a different way that might start to have some light bulbs clicking for you if you're stuck. So we'll do that again. But stay patient. We're going to get paid. It's just a matter of time. Love you guys. See ya.